So a lot of us has been waiting for Oatly to IPO. I've been talking about it now for about a half a year. We didn't know an exact date. And the last couple of months, it's been getting closer and closer. And then we found out that it would probably be sometime in May. And now it seems to happen. Tomorrow, it's finally going to IPO on the 20th of May. So the more immediate question is probably, should you invest now, or should you wait, or should you even invest in the company? So that's what we're going to talk about today here on the PlantStock channel. And as always, I would truly appreciate an early thumbs up since it helps with the algorithm. And if you want to keep getting more information regarding different PlantStock companies like Oatly, Tattooed Chef, Beyond Meat, and the Very Good Food Company, to name a few, make sure to subscribe and don't forget that bell button. Thank you, folks. I really appreciate your help. But before we can talk more about if you should invest in the company or not, we need some background information, just a quick one. And don't forget though, I've made several videos on this, I think about 3 videos. So if you want more information about what kind of company this is, take a look at these videos. I'll leave them down in the description and then in the end of the video. But as we talked about before, it is a Swedish company. Actually, its headquarters is from the same city, or in the same city where I'm from, Malmö. And just a quick recap area, they produce oat alternatives, right? So oat drinks like different kinds of milks, chocolate milk, quickly here, yogurts, on the go, and some, different forms of yogurts here. And things you can use when it comes to cooking. Whipped cream also you have here, vanilla custard, some cream cheeses, and ice cream. So that's a quick rundown. Again, take a look at my videos from before if you want more info. So it's good to know that this company actually right now, as of March this year, has about 4 factories in operation and 3 factories are planned or under construction. So that tells you something, that this is a product that is wanted, right? And we mentioned this before, as of December, it could be more now. They actually have their products at about 60,000 stores around the world and 32,200 coffee shops. And again, it could be more. And some of the franchises they're partnered with is Starbucks, Target, Tesco, and Alibaba. And when it comes to the China markets, since they're invested there too, like Beyond Meat, they launched in the Chinese market in 2018 through coffee and tea shops, expanding to over 8,000 locations by the end of 2020. And it could be interesting to find out also that Oatly has about 53% share of alternative dairy product market here in Sweden, where I live. And this is highest selling brand in the oat category in the UK, Germany, and the fastest growing in the US, which basically means that it's an industry leader in these countries, right? And which is good when it comes to the UK and Germany, as we talked about, that UK and Germany is actually those countries in Europe that sells the most plant-based foods and dairy products. So smart move there. And one of the reasons why it could be a very attractive company for a lot of people is that they target the sustainability crowd, right? People who cares about the environment and the health. And we'll talk more about that. But according to their research, their cows, instead of consuming cow's milk, you save about 80% less greenhouse gas emissions, 79% land usage, and 60% less energy consumption. And according to this article, based on consumer insights, the plant-based category is benefiting from consumers' seismic shift toward more conscious eating, with approximately 60% of consumers in the United States citing that they led a much healthier lifestyle and eat significantly healthier, while 43% mentioned they are eating more sustainable products than 3 years ago. So that looks good, and it does definitely seem like this product is well situated in time, right? And we also find out that in the US, 32% of consumers have reduced or stopped their dairy milk intake in the last 3 years, and they show more interest when it comes to dairy alternatives. And one of the reasons why you should be interested in this company is that they're trying to disrupt the dairy industry, right? Just like Beyond Meat is trying to disrupt the agriculture industry, which is a $1.4 trillion industry, this is going against the $600 billion industry, dairy industry, right? And when it comes to the numbers here, it is, as you know, difficult to know exact numbers. I've seen actually that it could be around 700 billion, a little more than that. And if we take a look here, 2019 it was around, getting close to 700. But by 2024, they expect it to be around $1 trillion. And I think that's important to keep in mind, because that means that is a huge opportunity here, right? We're going to talk about those numbers later on, so stay tuned. And if we take a look at their financials, we've talked about that a little before, but very interesting to see here sales in region 2020, right? In the Americas, I guess they mean both North and South America, they've sold about $100 million worth. And EMEA is actually Europe, the Middle East, and Africa, right? So they put that together here, and I would say probably without a doubt Europe is the biggest here. I feel pretty certain about that. I don't have the exact numbers, but nonetheless, that's a huge part of it, right? And they're growing more and more in the Americas, as we know. And if we take a look at the quarterly that they had now for March 31 of this year, it was a revenue about 140 million, which was up 66.2% year over year from 84.2 million the same period, right? For the full year of 2020, we've talked about that before, around 421 million. That was an increase of 106% from 204 in 2019. So they are doing really well, right? They skyrocketed, and the revenue was by 72.9% in 2019, reflecting the company's accelerating sales momentum, right? And the quarterly gross profit was 41.9 million, which is a margin of 29.9% and a net loss of 32.4%. And in 2020 as a whole, gross profit totaled 129.2 million with a margin of 30.7% and loss of 60 million. The company reported a loss of 35.6 million for 2019. So we know that this company is going minus, and just like Beyond Meat and just like Tesla did for a lot of years, these disruptive growth companies tend to lose a lot of money in the beginning years, right? So that's to be expected. And one of the reasons is, as they talk about here, is that the continued investment in production, brand awareness, new markets, and products development, and the company plans to continue investing in innovation, new manufacturing facilities, and expanding its customer base. And that's what I normally love about disruptive companies. I want them to keep investing in their company as much as possible, so they'll be expanding really rapidly. Now, if we just get a little more information regarding the actual IPO that's going to happen tomorrow, it's going to be on the NASDAQ Global Select Market. We know this is a tech company, right? Ticker symbol OTLY, so not that different from Oatly, right? And obviously it's going to be in American shares. And some of you I know have already asked me the question, like, at what time is it going to IPO tomorrow when the market opens? And the New York Stock Exchange or NASDAQ, it's 9:30 to 4 p.m., right? And we don't know. I actually talked to the investment bank where I do my buyings of stocks, and like they told me anyways, I do imagine that is the same. Like when it comes to American stocks, American companies, when they're IPOing, you don't know exactly at what time. We know the date, which is going to be tomorrow on the 20th of May, but we don't know the time. So we're going to have to go in and check ourselves all the time to just make sure when that happens. So a bit annoying, but yeah, but be aware if you don't want the stock price to like fly away. So this is also something we talked about before. So how much is the company actually worth? Well, the company plans to sell about 64.69 million ads, and existing shareholders are offering an additional 19.69 million, making a total of 84.4 million shares. And the actual target price, as it seems right now, I've seen this in other pages as well, is that they do think that it's going to be around $15 to $17 when it opens up, which would raise for them $1.3 to $1.4 billion. As Oatly expects to have around 592.1 million shares outstanding after the IPO, and they do expect to have a valuation of about $9 to $10 billion, non-diluted. I should hope not, considering 590 million shares. And it does sound a lot, but we have to understand the price. If they're putting it around $15 to $17, right? I mean, if we take that times 10, then it would be around $150 to $770, where basically Beyond Meat was for the longest time when it was around $9 to $10 billion in valuation, right? So it's not so strange then. Folks, before I conclude this and talk about if you should invest or not and talk a little about the actual valuation, I would be really interested to hear your opinions on this. And if you're psyched about this, if you're going to invest now or if you're going to wait, let me know down in the comments. Now, is this a company I would believe in long term? It definitely is. I've had this company near me around 10 to 15 years. I've been buying their products for 10 to 15 years, right? Way longer than most North Americans, obviously, since it is a Swedish company. They have a lot of great products. I do like them. Not everything I enjoy totally, but that doesn't really matter. Their product is solid anyways. But the transition is real, as we know. The paradigm shifts that we are entering, it's not only regarding meat, right? It's definitely regarding dairy alternatives. And there is a lot of discussion regarding that the dairy alternative industry is going to be bigger, more large than the meat alternative industry. And that's not so strange considering that I would say most people, if they eat dairy, they drink milk, they eat yogurt, they have cheese, they have butter, they use cream in their food, whippable cream when it comes to desserts. So it's not so strange that people would consume more dairy and that would bring more revenue in the long run, right? So I do see that this is where we're headed. The transition is real, right? More people are going to move away from dairy products to this. Now, it's not only going to be vegans, and it's not only vegans now, right? I would say a large part of the people who actually eat dairy alternatives aren't vegans. They might be vegetarians or flexitarians, but I know plenty of meat eaters, so people who love meat and would never give it up at the moment anyways. They still go by dairy alternatives like soy products or oats products or almond products, because we have to remember when they don't target only the vegans, because there's plenty of people out there who have sensitivities when it comes to lactose, but also specifically milk protein. We're seeing it more and more internationally. And then there's another group of people who actually prefers it because they feel that they feel better when consuming dairy alternatives instead of using typical dairy products. So I think the market is huge here when it comes to that. And I could see it really skyrocket with time. And we have to remember that even though they had quite a lot of options already, but I do suspect that they're going to move into different SKUs as well. I mean, just within the dairy alternatives, you can have a lot more. And as we saw, they had some cream cheeses, but imagine the whole cheese world when they decide to move into that. That's in itself is going to be huge. I know there's concern when it comes to competition because there are some other plant-based alternatives out there, and there's also companies like Alpro that is owned by Danone, and Alpro is quite popular, and here in Europe it's very popular. But I would actually say when it comes to the dairy alternatives in the form of milk alternatives, I actually prefer Alpro, soy or almond milk. I really love those products. The oat milks isn't really for me, but I love their other products, like actually their chocolate milks, Oatly's chocolate milk, their cream cheeses, their creams for when you're making food, and their ice creams are solid. So, and it's not about what I think anyhow, right? Folks, let me know down in the comments. Have you tried Oatly's products? Do you enjoy them? What do you think about them? Let us know. But even though they will be facing a lot of competition, I would say that they seem to already be basically industry leaders in many parts of the world. So they already have some form of advantage. And considering one large advantage they do have is that they don't use soy, right? And not using soy products in today's world makes perfect sense from a business perspective. Me personally, I'm not worried about soy products. I eat tofu like crazy. I love tofu. And most research actually shows that people that eat a lot of tofu and soy products tend to both live longer, have less cancer and heart diseases, both men and women. That's another discussion though. But there's plenty of people who has either soy sensitivities, but actually are nervous about soy because there's been a lot of propaganda, a lot of reports over the years that soy is really bad for you. And we're going to have a discussion about that. But I would say from everything I've read from a research space, meta-analysis, analysis from around the world, it usually points to one common denominator that is really healthy for you. But again, it's not about that, right? It's what people believe and what is in. And I think if you have a product that doesn't have to have soy, kind of like Beyond Meat, they don't use soy, right? Then you have an advantage. Because right now, there's not a lot of studies that people can't handle oats. Not normally, right? But then we come to the question again, should you invest in, like tomorrow? Well, the valuation is pretty rich. If it would be around $10 billion and they have a yearly revenue, at the moment, I believe that's going to be way higher in a year from now, but at the moment, around 400 million, that would give them a PS ratio of 25. And I would say that's not terrible for a growth company that's going to be really popular and is already popular. We know that Tesla and Beyond Meat has usually been trading around 20, 22. They're lower at the moment, but I do expect they'll be there soon again. So not strange, but it does seem to be kind of harsh when a company just right out of the box begins trading at a PS ratio of 25. That seems pretty high. So I do suspect that there might be people who might be nervous right now and feeling that they might wait a little. We'll have to see, right? But even if it is that they will trade at a 10 billion valuation directly when it comes from the IPO or in the beginning, I do believe that whether it goes up or down, they will grow into those numbers with time. I definitely see that happening because, again, they're going after a $1 trillion industry. And let's say they just took 1% of that within the next 5 to 10 years. That would be a 10 billion in sales. I don't think that's impossible given that this is probably an industry leader and they're making all the right moves. They're putting their money to perfect their product. So I wouldn't worry about that, but it might take time. So I would say go long term if you're going to start investing already. But there's another important thing I think you need to think about. I've actually talked about this before, but it is the company Snowflake, which is a company that IPOed in September. Right? It's a huge cloud company, and a lot of big names wanted to invest in this company. And it's worth, I think, it's worth about $63 billion at the moment. When it was going to IPO, since it was super popular, right? What happened there was that it was I was close to buying the stocks because I was really interested in it. And also Warren Buffett and his company were going to buy in, or did buy in at the time anyways. So it made sense to me, and it seemed to be really good investment for the future. And it might be still, right? And it was supposed to open up first around $60 or $80, something like that. Okay. And then 1 or 2 days before they started talking, okay, now there's something called pre-IPO, and that's the problem when from fairness perspective is that if you're a multimillionaire or billionaire even, you usually get an option to go in and invest way before, like basically a few hours before or 1 or 2 days before. And this affects what the company is going to be worth and the stock price when it opens up, right? So what happened is that it went up then to $100 first, and then they talked about, just close to the IPO 1 day before, it's probably going to be like 105 or 110, and then let's talk about 120. And I thought, man, that's a lot. But okay. Then when it did open up, the IPO, and I'm talking just a few minutes when I was checking all that it actually started selling, and when I was going to buy, it didn't say, all of a sudden, I tried to, 120, buy it for 120, 125. And it wasn't going through, right? The orders weren't going through. And I was like, what is happening? And then I took a look at Yahoo Finance, and it was up at just after a few minutes to $240. $240. And this is in September, and this is $220 now, right? And that's something I want you to think about, because it was a very popular company. And that meant that a lot of high rollers started investing pre-IPO, which meant that basically if they invested at $80 or $100, when it IPO'd at $240, just like that, that basically meant that people could just sell off directly if they wanted to. But they've made money. They doubled their money, more than doubled their money just directly. And that's how the IPO works, IPO world, when it comes to if you have a lot of money and connections, apparently. So that's what happened. And then after a couple of months, and I actually heard Meet Kevin saying that he thought this would happen, and it actually did, because in December, until December, it went up to about here, I think around $370, $390. So that's a solid growth in just a few months. But they started diluting their shares and then down, right? So that is something I want to warn you for, right? I want you to be warned about that. And also more relevant, I want you to be aware of Beyond Meat's history. Being a history teacher, I'm always going to talk about history. I think it helps me when it comes to investing in stocks. And if you take a look at when they IPOed about 2 years ago, I think it was actually supposed to be around $40, but it flew up directly almost after a few minutes to $65. And then it took its time. It took a couple of weeks, but it flew up to almost $240 in just a few weeks. Amazing numbers, right? Then after that, it started trading down again, and then up, and then down, and then up. And as we know, back in January of this year, we had prices of about $217, right? And then it's down now to $100. So do expect a lot of volatility from a disruptive company like this. A lot of volatility, like Beyond Meat. There might be a lot of short sellers there, right? And then given the market at the moment is volatile in itself, the fear of inflation, fear of hyperinflation, whether that's actually something to really be worried about, but that's the fear, right? And then there's the fear of interest rates becoming higher, or that the Fed are going to raise them, considering that there is an inflation, and so on. Which means that Oatly is opening up in a market that is already very volatile. I mean, yesterday, a lot of the growth stocks that I'm invested in or that I'm looking into were trading really well, like 5 to 10 to 15% up. Now, all of them are going minus again. So it is this roller coaster. So be prepared for that. So again, should you invest or should you not? Well, if you do invest already tomorrow, I would suggest that think long term then, right? 3 to 5 years minimum, I would say, at the very least. Now, there is a chance, just like Beyond Meat, that this is going to be the second largest plant-based company out there, right? And it already goes up at about the same valuation, actually larger valuation than Beyond Meat. It could be, of course, like historically, just after a couple of days, and maybe faster, who knows? It just flies up like crazy, right? But that means usually when it goes really quickly up, it could fall down really quickly too. Or it could be like some companies, like we know Coinbase, that just IPO'd also, it went down quite quickly directly. So you actually get a less valuation than it started. So that's something to keep in mind, right? Sorry folks, this was a longer video than I actually meant it to be, but I feel this is important to think about, to trade with caution here. Remember, I'm not a financial advisor, but just trade with caution and be careful and invest safe, right? Well, folks, that was it for today. I truly hope you got some value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding Oatly, because I'm going to keep delivering news on them now, that's for sure, and other plant-based companies, make sure to subscribe and don't forget that bell button. And as I stated just recently, I'm not a financial advisor. These are just my own thoughts and opinions. It's important to do your own due diligence and invest safe, always. Hope you have a great Wednesday. See you soon and peace out.